Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I am Ryan Nauman, the market strategist at Zephyr. Now, it's going to be another fantastic episode today that I'm super excited for. You know, the wealth management industry has evolved tremendously over the years. And one of the reasons why is because investors are demanding more transparency, control, flexibility, and personalized investments to better align their investments to their unique investment objectives. Well, I'm very excited to have on the perfect guest on to talk about the importance of personalization. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. I'd like to give a warm welcome to Dana Dioria. Dana is the group president of solutions and Co-CIO at Envestnet. Dana, thank you so much for coming on the show. Like I said earlier, it's such an honor to have you on. Can you tell us a little bit more about yourself and Envestnet?
Yeah, absolutely. Thank you so much for having me, Ryan. I am, as you said, the group president of solutions. Solutions at Envestnet really covers all of the asset management functions. So first and foremost, our TAMP, our Turnkey Asset Management Program, which is our AUM-based business. We have more than 800 asset managers on the platform, around 400 billion in assets in the TAMP. So quite a robust offering, of course, and many different broker-dealer, RIA clients using the TAMP. It also covers our in-house asset management and investment solutions, everything from models to direct indexing solutions, to tax overlay, high net worth consulting, you name it, CIO support, et cetera. And so that, seeing that base fits into the broader Envestnet financial ecosystem. So if I were to describe Envestnet in a nutshell, it's pretty much everything an advisor might need, right, to actuate their advisory business, from data aggregation and performance reporting to proposal, creating the framework that you need to present to the client, all the documentation, reporting, et cetera, billing, you name it.
Fantastic. Awesome. So, for years, when I started in this industry, I'm going to age myself here 20 some years ago. Oh my gosh. We often talked about, financial advisors need to offer personalized service and reports to clients. Back then it was like a handwritten birthday card or a handwritten note to the client. And we thought that was personalization and maybe some reports and stuff like that. We didn't necessarily include investments in that, maybe a personalized allocation, but that is different today. Now we're talking about personalized investments. Why is it important for financial advisors to offer personalized investments?
Well, I think there's a few reasons that you want to personalize the investments of the client. Of course, there's always been, that unique circumstances part of the financial planning exercise that you have with the client where maybe they have assets elsewhere or whatever, and you want to personalize the allocation, or, you need to personalize beyond just a set asset allocation because of the client's preferences or unique demands. There are a lot of reasons for sure, anything from a business owner who has, gains they expect to come in from the sale of their business to somebody who's a longtime employee of an existing company, your high net worth client who's just got a lot of different assets in a lot of different places that they want to personalize around, a values-based investor, which I think a lot of advisors think of as niche, but I think you need to see more and more of that. When I say values-based, I don't necessarily mean that they're absolutely a social warrior or something, but they just may have some social preferences they want incorporated. And it's pretty easy to do that nowadays with algorithms and optimizations. And so their expectation of their advisors that's something that they could incorporate. And in fact, they can, there are definitely, and we'll talk about it, but there are definitely solutions out there that enable that pretty easily. So I think there's a lot of reasons to personalize the portfolio. But from the advisor's perspective, it's create deeper engagements with the client, keep the assets stickier to the advisors and disciplined in the market. So the long run return potential can be achieved more likely, right? It's just, when you have that deeper engagement with the client, they're more likely to probably stay in that portfolio and sit it out with you than they are if it's just kind of very transactional in nature.
Fantastic. We often talk about increasing that client or enhancing the client experience, right? And I think that goes along with is, deepen that relationship, enhance the client relationship, or enhance the experience. And it's a better long-term relationship. And with that generational wealth transfer happening, there's a better chance of keeping those assets as they transfer to their heirs. Do you think it's a fad, or what's driving this shift towards personalized investments? And do you think it's a fad, or is it here to stay long term?
Well, I think it's got to be here to stay, from the perspective that it's, just the kind of thing where the tech has evolved to an extent where it can be done. So it's hard to imagine, like going to a place where we don't have those capabilities. I mean, you just think about your smartphone, right? The level of customization you've just come to expect. Just you're surfing the web and you get served up recommendations based on, what you're looking at. I mean, I think, because the tech has progressed to the extent that it has, and there's a certain amount of expectation of customization that we've all just been sort of trained to expect. We're living in this cocoon of technology, as I often say. It's hard to imagine that people are going to be able to have that sort of experience in their personal lives, and then they go to their financial advisor and they don't feel any of that engagement from a customized perspective when it comes to their finances. So I think the expectation is there, but that doesn't mean that every client has to have very granular personalizations. I think a lot of clients are still in a boat where a model works very well for them. The personalization may come around how you talk to them about the model and the amount of high touch engagement you have with them on it. So what constitutes personalization can differ depending on the client. And to make sure I answer to hey, what's driving this? Part of what's driving it, of course, is the experience people are having elsewhere, where, again, customization is becoming so obligatory. And I think also part of what's driving it is just, the capability sets have increased. So you think about things like direct indexing and tax management, these algorithms, optimization programs that have been developed over the years to do these types of services can in turn be used to personalize in a way that, just why wouldn't you, right? If the client wants that and the advisor sees an opportunity with that. So I think the tech involvement, to a certain extent, there's a feedback mechanism going on there.
Perfect. It's interesting you said it's that outside world, outside this investment management, wealth management space that we live in and all the time. It's driving what we're doing in the wealth management space, which is really interesting. It's like the Amazons of the world are driving what's going on here in this space. And it's also interesting, you talked about this specialized or personalized ads that we're getting. To me, that's a little bit scary when I might be talking about something, about e-bikes recently, and then I open up my iPhone or my phone and it's all over. It's like, oh my, what's going on?
I think it is a brave new world to a certain extent. You're not wrong, Ryan. But at the end of the day, I don't, it's hard to imagine us going backwards from it either.
I completely agree. So you mentioned personalized portfolio. So what's it look like? And you talked about asset allocation. Is a personalized portfolio, is it just an asset allocation that maximizes a return per unit of risk and that's unique to that client? Or is it more granular than focusing just on the overall asset allocation? Do we get more specific than that?
So it can be both. So personalization can be done within a sleeve in the overall allocation, or it can be done at the allocation level. The programs allow for kind of both of those. So for example, at the sleeve level, I'd say the most obvious manifestation of it is direct indexing, okay, where you go in, and by the way, it's called direct indexing because it started out as, an index that you buy at the same weights as, say, an ETF would buy, except I own the underlying securities. A lot of the reason, and some DI providers will say, oh, the reason you do this is tax loss harvesting. Yeah, that's a big piece of it. But 20% of our DI accounts in-house here are qualified accounts. So it's not entirely a non-qual proposition. Some people just want a low-cost SMA, or they want to be able to customize an SMA for other reasons. So I think you can personalize within a sleeve. You can get very granular with those personalizations because those DI optimizations are, very good at doing that. But even at the asset allocation level, you can also have input and make changes to the asset allocation based on any number of things, right? So, maybe there's a reason the client wants higher or lower international. Maybe they want commodities in there. Maybe there's a human capital interest that they want reflected in that asset allocation. So what the algorithms are good at doing is, to your point, still having a nice objective function around either return and per unit of risk, or objective functions really around keeping tracking error to some index low, while at the same time accommodating these personalized requests. But I think, the reasons, they can be after-tax reasons, they can be reasons that incorporate other outside holdings that are not in the particular portfolio you're optimizing. So it's hard to necessarily say it's return per unit of risk for that particular portfolio, because it might be broader house holding that the advisor's bringing into it to begin with for why they're doing it.
Fantastic. Years ago, we always thought, well, we'd offer kind of the same mutual funds or ETFs. We would just tinker with the allocations and, make sure that it was customized to the client and their risk tolerance. Well, that's, like you said, that's changed now, and you can get more granular. So obviously your objectives and your values and what you want in an investment are different than mine now, because like you said, technology and the evolution of products and investments, we can do that. And I think it's really helping, this industry move forward. It sounds great, sounds fantastic, sounds maybe easier than it is, but what are some ways an advisor can offer personalized investments or portfolios? But the key is do it at scale while maintaining that personalization. Dana, let's say you have 200 clients. You want to personalize their portfolios. That can be pretty daunting. How can you do it at scale?
Yeah, that's the key question, I think, because, at the end of the day, an advisor who wanted to personalize within a series of securities holdings or at an asset allocation level, they could always do that with an Excel spreadsheet and, just manage that client's account separately and look at it a few times a year and try to true it up without upsetting, whatever these outside constraints are, usually in those cases, tax. But so yeah, I think your question is right on. It's, well, how am I now incorporating technology to do that at scale? That's the key point of what an Envestnet brings to this, and what we're trying to empower advisors with is the tech to make that a model traded and therefore scaled experience, so that it's not the advisor is managing that account. If there's a need to take money out of the account, they're looking at the individual underlying securities and saying, okay, well, what's in a loss position? What could I actually move without upsetting? How close can I get it back to the tolerance? That's all done with, computers, right? Technology, so that you actually create this personalized solution within a chassis that is a unified managed account chassis on our platform, where it's going to rebalance automatically based on how you set it. It's going to honor certain constraints. It's going to manage the portfolio to the personalized customizations you've requested, and it's not going to require you to be going in and managing that yourself. Mm-hmm. So that's really where the scale comes in. It's the bringing the personalized solutions into a model traded chassis, so that client is getting ongoing asset management, allocation management, rebalancing, tax management. Literally any trade that's going to happen in that account is going to be looked at from a tax perspective. Even something like fee removal, right, to be done in a tax optimized way. So it's really just an opportunity for the tech to step in and enable the advisor to make that more scaled.
Fantastic. So you brought up some of the capabilities Envestnet is offering. Perfect segue to my next question. Envestnet made news recently, and their dedication to personalization and customization is emphasized by that recent news that just came out. to make its UMA platform highly personalized through partnerships with some of the largest asset managers in this space, whether it's BlackRock, Fidelity, Franklin Templeton, and State Street. Can you maybe go into a little bit more details there?
Yeah, thank you for asking. I'm very excited about that partnership, actually. So from our perspective, the personalized solutions at scale are tech solutions that bring portfolio management. And, I would say we're starting to blur the lines between what is a tech solution and what is an asset management solution. And as we generally tend to think, the best place you're going to be, the most optimal solution is going to combine the best of both, right? You need the intelligent asset management still, but you want the tech to do all the scaling and the customization. And so the partnership with these four managers, BlackRock, Franklin, Fidelity, State Street, it's designed to bring leading asset managers and their insights and intelligence around management to that personalized solution set. So our advisors in our home offices have a menu. That's really what it's about, is to say, look, it's a tech solution, but we're also going to bring top tier asset managers to the table within those solutions. And we didn't previously have that. If you were coming to us for a UMA eligible DI solution, it was really our in-house solution, which we love. We've been running since 2013. It's a fantastic solution, but it's one option. And we have many clients who are looking for menu there. So we're really trying to bring a menu of robust leaders in the space.
Fantastic. Dana, great conversation. I always like to end the conversation with maybe something a little bit fun. It could be business related, it could be outside of that. Any fun stories, interesting items that maybe, the roaring kitty has been roaring again. Anything interesting that you've seen recently?
Ryan, I'm so sorry. I should have prepped for this because I didn't think of anything, and there's nothing there's nothing supernaturally coming to me. I will say, it's not super fun, but I will say that next steps, of course, AI, in terms of like what I'm watching and where I am kind of focusing attention from an asset management perspective, it's how does AI now come in and step function increase the capability sets that we've just been spending time talking about. And I do think that is a fun place to be, especially you're in the market today, massive concentration in this market for a reason. There are certain leaders in the space that are really driving a technology revolution that I think, and the question is, how long does it take? But at some point cascades down to possibly massively increase productivity, massively step function increase where we are on the capability sets that we've been talking about. So it's an exciting time to be in our field, I would say.
Yeah, I completely agree. And you've talked a lot about technology and how there's that gray area. I think AI is just going to, I don't know if make that gray area wider or more gray area, but the AI, it is fascinating. Here at Zephyr, we're working with it, trying to, figure out really what is it and how can we leverage it. I was just at Wealth Management Edge and talked to a lot of advisors, and they know the value in it. Is just trying to like get your arms around it and like, how do you use it? What does it look like? And you know, everyone knows the value, is still trying to figure out how.
Yeah.
Right?
Yep.
So,
I think that's exactly right. We know that the makers of AI solutions are winning in the market. The question is going to become who's going to win on the user side. And we have yet to figure that out, but I think it's going to make a big difference in terms of productivity and, next stage of where all of this goes.
yeah, exactly. Dana, thank you so much. It was such a fun conversation. Like I said, it's an honor to have you on. I really appreciate it. Where can our audience get more information about Envestnet?
Certainly our website, probably best place to go, www.envestnet.com. And of course, any of our advisor home office clients or would-be clients, we're happy to have you. And we have business development resources that just feel free to reach out. And there's a chat bot that you can go in and somebody will reach out.
Fantastic. Thank you so much, Dana. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel, as well as on Spotify and iHeartRadio. Thank you, and have a great rest of your week. Dana.